Welcome everybody to this event that we're going to host this afternoon. My name is Jeremy Neilson. I'm the Managing Director of the Utah Fund of Funds, and we are putting on a 6-part training entrepreneurial series on various topics that are aimed at helping entrepreneurs think through and strategize on fundraising, specifically fundraising through institutional investors. We feel like we have an expertise here and are excited to disseminate some of that knowledge to you today and over another 5 series after this one. Let me first tell you about the Utah Fund of Funds. The Utah Fund of Funds is an economic development program started by the state of Utah. And the goal here was to help entrepreneurs in the state of Utah. And so through legislation and a lot of hard work, the Utah Fund of Funds is up and running, and we take money and we invest in venture capital and private equity funds. On the flip side, we also work with Utah entrepreneurs and Utah businesses and companies in order to help them in their fundraising strategies. Typically what we do is a matchmaking service where we have a large number of relationships and contacts in the venture capital and private equity industry. And so what we do is we spend time investing in venture capital and buyout funds. We then turn around and also help Utah-based businesses and companies and technologists get introductions to people that are relevant for them to talk to. So over the last 6.5 years, we've been working with this program and learning a number of things about private equity and venture capitalists and about entrepreneurs and Utah in general. And so we're aggregating a lot of that data and putting it forth to you in a series and recording it and streaming it as well so that we can sit down and communicate a lot of the things we've learned that can be beneficial for Utah and Utah entrepreneurs going forward. So the history of the Utah Fund of Funds, or to date, we've visited with over 500 venture capital and private equity funds. And we do this in our efforts to find those investments that we think are appropriate for the Utah Fund of Funds. We also visited with 500 plus Utah entrepreneurs and businesses as well. And so we feel we have a unique expertise and knowledge base that we can disseminate information and help people understand the two worlds, as what venture capitalists are looking for, how their funds function, how they make decisions, and also what strengths and weaknesses entrepreneurs have, as we've seen a number have come through the office and we've worked with and visited with and made introductions for and seen some be successful and seen a lot be not successful in fundraising. And that's not to criticize them as individuals, it's kind of the industry. It's just very hard to fundraise and a very small percentage of any entrepreneurs anywhere in the world fundraise from institutional investors. So our hope is to kind of increase those odds to help you think through your strategy and understand the background as to how the industry works that can help give you a better fighting chance as you go out and build your own strategy. So let's talk first about private equity and venture capital. Venture capital typically, so when I'm talking about, and I'll talk about this a little bit more, venture capitalist is a certain strategy and sector of the private equity world, and private equity is also another section which typically deals with buyout shops. So basically what are private equity professionals? What do they do? And to kind of talk about that, let's talk a little bit about what other people do first so we can compare. There's lots of places to put money or to invest money. And let's start kind of at the basic. Let's say you have a lot of cash and you want someone to manage that cash. So you can basically put that in maybe U.S. Treasuries. You basically want to have very low risk. You want your cash to not disappear. You want to make sure tomorrow when you need that cash, it's going to be there. But you'd also like to get a small return on that. You don't want to get a zero, so you put it into something. There's managers out there that will help you get basically another 50 basis points above U.S. Treasuries, and that's success for a cash management professional. And they will take a small fee for that. Maybe you go up the risk spectrum and you maybe go to a mutual fund. So you're going to buy a cadre of stocks, a basket full of stocks. And there's risk here, but it's much higher than a treasury or cash management. There is risk that things will go down, but there's not a high risk that you'll lose all your money. Of course, we did go through a very scary time a year ago where we saw a lot of stock value disappear, but surprisingly, a lot of that's back already.